Anthropic is closing a $30 billion round at over $900 billion, vaulting past OpenAI for the first time. Plus 4 more catalysts that decide this week's AI tape. Let's get into it. Anthropic's raise of at least $30 billion at a $900 billion plus valuation is set to close by the end of May, pushing it past OpenAI's $852 billion March mark for the first time. Sequoia, Dragoneer, Green Oaks, and Altimeter are co-leading. The numbers underwriting it are staggering. First quarter revenue grew 80 times year over year. Annual recurring revenue now tops $44 billion, and clients spending over $1 million each doubled in 2 months. This reframes the entire frontier lab pecking order. The bear case, a $900 billion valuation on roughly $44 billion of ARR, is a 20 times multiple priced for flawless execution. And most of that fresh capital flows straight to AWS and Google Cloud as compute. Capital in, GPUs out. The forward signal: watch whether that 1,000-plus enterprise base keeps doubling. If net retention holds well above 150% into Q2, the multiple defends itself. Below that, the OpenAI gap reopens. Nvidia reports fiscal first quarter results after the bell on May 20th. Consensus EPS of $1.76 on revenue of $78.75 billion, nearly double the data center business of a year ago. Data center revenue alone is projected near $72.85 billion, up from $39 billion. This is the single biggest catalyst for the entire AI trade this week, and it directly tests the Anthropic story. Those compute commitments to AWS and Google Cloud are exactly the demand Nvidia's guidance must validate. The bear case. Jensen Huang concedes Nvidia's China share has collapsed from 90% to effectively zero, and any crack in Blackwell gross margin sustainability turns this into a sell the news event. The forward signal: roughly $500 billion in cited Blackwell and Rubin demand through 2026 is the number to test. If forward guidance clears it, the sector rallies. If management hedges on margins, the bubble debate gets louder fast. Google opens I/O 2026 tomorrow, May 19th, at 10 a.m. Pacific, with a major Gemini overhaul as the centerpiece, reports split between a Gemini 3.5 update and a full Gemini 4.0, plus a rumored unified text, image, and video. Gemini Omni pipeline. Android XR glasses with Samsung and Warby Parker, and an Aluminium OS Chrome OS successor round out the slate. For Alphabet investors, this is a referendum on AI monetization, not benchmark bragging rights, but whether Gemini converts into revenue ahead of Apple's June reboot. The bear case. I/O has historically been a demo event, and another round of impressive models without a clear monetization path leaves the stock where CapEx anxiety already has it. The forward signal: listen for cloud and search monetization language, not model scores. Concrete agentic toolkit revenue framing moves the stock, a pure model showcase, and the market shrugs, and Apple's WWDC inherits the narrative. Meta guided 2026 AI capital expenditures to $115 to $135 billion, nearly double last year, and unveiled Muse Spark, its first flagship model under Chief AI Officer Alexander Wang's new superintelligence labs. The pitch: competitive multimodal, reasoning, and agentic performance at a fraction of mid-size Llama 4's compute cost. That efficiency angle matters because it reframes the entire infrastructure spend debate running through Nvidia's print 2 days later. The bear case: $135 billion in CapEx is a staggering bet, and the market has already punished hyperscaler spending without a clear return timeline. Muse Spark has to prove the efficiency claim in production, not on slides. The forward signal: Watch independent benchmarks and inference cost per token in the weeks after release. If Mu's Spark genuinely undercuts Llama 4 economics, Meta's CapEx looks disciplined. If not, it's the clearest example yet of spending outrunning returns. Apple is preparing a platform shift internally called extensions, letting users pick third-party providers like Google and Anthropic to power Apple Intelligence across iOS 27, iPadOS 27, and macOS 27, with integration via App Store apps. This is the connective tissue under today's other stories. It turns the iPhone into a contested model marketplace and hands Anthropic and Google direct distribution to over 1 billion devices, the exact reach that justifies Anthropic's $900 billion valuation. The bear case: opening the model layer concedes Apple lost the frontier race, and routing intelligence through rivals risks commoditizing Apple's own software differentiation. The forward signal: the full reveal lands at WWDC in June. If Apple confirms revenue share or default provider economics, whoever wins that slot, Google or Anthropic, gets a distribution moat money can't easily buy. Watch which name Apple leads with on stage. The through line this week: Capital has voted $900 billion for Anthropic, $100 billion plus CapEx from Meta, and now delivery has to answer. Google I/O tomorrow, Nvidia Tuesday. Two prints decide whether this is a build-out or a bubble. Subscribe for the Daily Edge. This has been the Daily Alpha.